Ladies and gentlemen, good day and welcome to the Concall Q1 FY23 earnings conference call hosted by DAM Capital Advisors Limited. As a reminder, all participant lines will be in the listen-only mode, and there will be an opportunity for you to ask questions after the presentation concludes. Should you need assistance during the conference call, please signal an operator by pressing star then zero on your touch-tone phone. Please note that this conference is being recorded. I now hand the conference over to Ms. Bhumika Nair from DAM Capital Advisors Limited. Thank you, and over to you.
Thanks. Good morning, everyone, and a warm welcome to the Q1 FY23 earnings call of Container Corporation of India. We have the management being represented by Mr. V. Kalyanarama, Chairman and Managing Director, and his entire team. I'll hand over this call now to Mr. Rama for his initial remarks, post which we'll open up the floor for questions. Over to you, sir.
Yeah. Thank you, Bhumika. Good morning to all of you. I'm sorry today I'm not having I'm a little sore throat, so please kindly listen carefully so I cannot speak more louder than this. We had good set of numbers for the Q1. We had very good growth in domestic sector. We had almost 30% growth, and compared to the last corresponding quarter, I think it's more than 35% growth. However, in exim trade, which is more dependent on the export-import of the India, there is a slight dip in numbers. Because still the imports has not yet picked up, and exports of course doing very well. So a lot of empty repositioning is happening, and our scheme which we have given last year, so bringing in empties into the hinterland is working very well. This year we continued that, and in the beginning itself we announced it for the entire year, and all the stakeholders, shipping lines, exporters, importers, particularly the exporters, they are taking good advantage of it. A lot of empty containers are coming into Concall ICDs, and exports are taking place. There are a lot of geopolitical factors affecting the business. All of us know these geopolitical factors which are affecting our business. However, now I think the things are looking up. From July onwards, we are seeing some good headwinds, and hopefully the situation will improve. The domestic market is definitely very good because India, even with all the commentaries we are hearing on day-to-day basis from across the globe, Indian story is good. The growth story of India is good. So the domestic demand, we are not seeing any problem in that. So we are very sure of our domestic segment growth. And exim segment also, we are hopeful that we will be able to achieve growth in that by the end of the year. On the revenue side, we are definitely getting growth, and our margins are also we are able to maintain, and our profit in absolute numbers we are increasing because we did some price increase at the beginning of this year, particularly in the handling income. So that is giving more revenue to us, and the handling has got a good margin. On freight rates, there is increase in when the rail haulage by the Indian Railways. We just passed on that. It took some time to pass on, so there was some effect in the first quarter numbers, but that will not be there in the subsequent quarters because that is already passed on to the customers. So we are working on particularly 2-3 fronts because all of us know that we work with good margins and we try to maintain these margins. Of course, there is competition. So competition is working at very low margins, sometimes maybe negative margins, and then they do some break-even analysis and break-even margins they work on. So to withstand this competition, to maintain our share and to improve our numbers, we are working on a different strategy which we adopted 2-3 years back, and we are going ahead with that, and we are now almost adding new things to it, and we are sure that this will give reward to us. One is the digitization, more of digitization and systems improvement across the company, putting customer value creation in the forefront. So in that, almost we are there 95%. This year we will be adding the artificial intelligence-based system on a trial basis at Tughlakabad very soon, which will be giving the customer a real-time experience of the cargo handling and cargo movement at ICD on both export-import side and the domestic side. So this very soon we are starting, and replicating that will be very fast at all the depots. It will be giving a complete different dimension towards customer experience. Second, we are looking at asset utilization, improving asset utilization. Because of the geopolitical factors, the addition of new assets is a challenge now. So we are working on asset utilization aspects. Improve upon the movement of the containers raised in our depots and to avoid the detention. Now we are introducing shunting locos in all our major terminals in the first phase and all the terminals in the second phase. And these phases, friends, will be completed within a year's time, both the phases. Every depot will have its own shunting engine, which will reduce the detention in the depot to a large extent. That improves the asset utilization, and we understand the asset utilization improvement will increase the margin to a very great extent. So with the same assets, we will be able to handle more cars. And third aspect which we are working now for the last 2 years, and we are continuously doing it right now also, is the addition of high capacity rigs and high capacity containers in domestic sector. This is a ongoing process, and in high capacity rigs, as of now, we already introduced 31 rigs, and the total addition in this will be, as I mentioned to you earlier, 270 rigs out of the 31 already done, and in this year we are aiming to introduce. We thought of introducing more rigs, but there are certain issues with the rail wheels availability in India, because there is only one government factory producing wheels. Now the government has liberalized the scheme, so we are now going for import of these rail wheel sets. So we will be adding continuously, and this will be there. This is the whole demand forecast, demand based on that we have gone for this program. Container procurement, again, we are developing the container manufacturing in India. Very positive steps are taken, and very soon we will start getting the containers manufactured in India. Maybe by the month of October, November, we will start adding new containers to our kitty. And the total orders we are already released for 8,000 containers, and we are going to release for another 10,000 containers in this year. And also we got further program to release. This shows the confidence we have on the growth prospects in domestic sector. And also, if required, we will utilize these containers for the short sea transports in the EXIM sector on a point-to-point basis, which we already did last year for sending rice to Iraq, which we did very successfully with very good margins in that. And we could get back all the containers back. So it was a very successful trade. So we would like to look at these in future also. So for that also we need containers. So this is the asset utilization side and new quality assets which we are introducing into the company. And the infrastructure addition is a continuous process. It is going on, and More depots are under construction. They will be starting very soon. Paradeep multimodal logistic park, first phase, it is already, the rail connectivity is completed and it will start working very soon. At Kalinganagar, very soon we will be commissioning, and the other places where we are working on, the work is progressing, and those things will be continuously getting added to the infrastructure space. Other thing which I was discussing, and there was a break in that because of the COVID situation, that is the distribution logistics. Now, again, that is taking traction, and we are hopeful in this financial year we will be able to start the distribution logistics business and the PPP more. And to start with, maybe there will be 2 places we will be starting this business. This is how the scenario is, and as I had given the forecast in the beginning of the year, we will be looking at 10% to 12% growth, both in volumes as well as in top line and bottom line. And I'm sure that we are on track towards that. Thank you. Hello.
Should we begin the question and answer session?
Yeah, please.
Thank you. We will now begin the question and answer session. Anyone who wishes to ask a question may press star and 1 on your touch-tone telephone. If you wish to remove yourself from the question queue, you may press star and 2. Participants are requested to use handsets while asking a question. Ladies and gentlemen, we will wait for a moment while the question queue assembles. The first question comes from the line of Mukesh Saraf from Spark Capital. Please go ahead.
Yes, sir. Good morning, and thank you for the opportunity. First question is on pricing actions, sir, that you might have taken. Could you give some sense on, especially with the empty container discounts now reduced further by Indian Railways to 10%? What kind of pricing actions you have taken in the past quarter, and in this current quarter, what can we expect?
Yeah, Railway has actually recently reduced the concession from 15% to 10%. So we have, while revising our tariff for empty containers during the last quarter, as our CMD already mentioned, we have already taken care of that, and we revised the tariff taking into account no discount from Railways. So even future also they will reduce from 10% to 0%. Already it has been taken care of.
Okay, this price revision is already reflecting in our numbers, or it takes some time for these contracts when they come up for renewal, this will start taking effect, sir?
This price actually we had affected from 1st of June. So for this quarter, first quarter, 1 month we had we can see the effect of this price increase.
Okay, so all customers, it comes into effect immediately from the date you put in that increase.
Sorry?
No, sir. In the past, what we had understood was that it takes time for it to take effect, because all customers, it doesn't immediately reflect in their in the pricing. It takes time. Some customers come up for renewal.
It has been done.
Okay. What was the rail freight margin, sir, this quarter based on that?
So rail freight margin has come down a little bit because of the reasons as mentioned by my colleague. It is 25.60 for this quarter.
25.6%. Okay.
Rail freight margin.
And right, sir. Understood. And my second question is, regarding the DFC.
It's not second question. Ask. Okay.
Sorry, sir. Go ahead, sir.
Yeah.
So just on the DFC, we have seen this year partial operations, in effect, and we have seen benefits for Concall and general container train operators with respect to turnaround time, etc. So would you have a sense on what percentage or what proportion of volumes would have already moved from road to rail based on what we have seen so far? And say in the coming year, FY23, FY24, what more we can see on that?
We'll give you that flavor little later because still DFC operations are settling down. Feeder lines are still not giving the desired transits. So we will work on that once we settle with all these things.
Right. But this year we expect that feeder lines, etc., to come into place, come into effect?
It is already there, but there are certain issues which is to be addressed, which will take time.
Okay.
So let them be settled down.
Right. Thank you, sir. Thank you. I'll get back in the queue.
Thank you. Next question comes from the line of Gaurav Bimiwal from Credit Suisse. Please go ahead.
Hello, sir. Thank you for the opportunity. Sir, can you throw some light on why the LLF amount that you provided has come down in the quarter? It's 95.6 crores this quarter versus last year 1Q you'd given 113.8 crores. You provided for IS last year.
So, if you recall, last year in the beginning we had told that we'll be aiming in providing for 450 crores because last year was the first year when we started having the rates from all the states for lands in the different parcels. So in last year's 450 crores, we have around 70 crores of provision there. This year, because things have settled down, we are not making any provisions. We are booking on the actual basis. So what we have booked it here is the actual that we pay to the railway. Meaning thereby, we are not keeping any provisions in this year apart from what we have actually paid to them.
Okay, understood, sir.
I hope I'm clear.
Yes, sir. That's quite helpful. Sir, can you just share the rail coefficient number and your market share?
Rail coefficient at JNPT for the first quarter was 18.48% and our share was 60%. So if we take out the short lead movement done by PCT, our share becomes 78%. Mundra Port rail coefficient was 26.45%, our share was 42%. Pipavav it was 71%, our share was 49%.
Thank you, sir. I'll get back in the queue.
Thank you. The next question comes from the line of Vasudev Parekh, an individual investor. Please go ahead.
Good morning, sir. Thanks for giving me the opportunity. My question is regarding the triple stack dwarf containers, which was carried out in January actually. Would you like to throw some light regarding this, sir?
We are not using any dwarf container and we have no intention of going for dwarf container.
Okay, so my second question is regarding the bulk transport of cement. As we are transporting the cement of Bharti Cement, are we in touch with some other big players of this industry also?
Yeah, we are in touch with all the cement players and everybody will come into this. They are just trying to set their ecosystems to adopt this practice. Soon another south manufacturing south is going to start. And this month itself it will start and big players are working on their ecosystems to start this. This is going to be the game changer. Nobody will be out of this. Everybody will be adopting this.
Okay, sir. Thanks for answering my question.
Thank you. Before we take the next question, a reminder to all the participants that you may press star and 1 to ask a question. Next question comes from the line of Logesh from Prosperity Wealth. Please go ahead.
Good afternoon, sir. Congratulations on the good set of numbers. I have two quick questions. We would like to know the strategic divestment. What would be the expected timeline for the divestment to play out? Let's say 12 months, 24 months. Any timeline on that?
So, the official line is this only that yes, it is on course. But regarding timelines, we are not in line to give any confirmation. The better confirmation can come only from DIPAM or National Railway.
Okay, sir. My second question is on the land license fee. Earlier, Concall had plans for going long-term lease arrangement with single payment. Could you provide us any updates on that front?
So those discussions are already there. The moment any change in the tariff rate or any kind of new policy comes out from cabinet approval and from Ministry of Railways, yes,
Okay.
company is looking forward to it that many of the land parcels or all the land parcels can be taken on long lease, and it will give us a clarity also. And we have got enough funds that CMB already discussed in the last call, that we have got our own reserves and getting finances also. So that option is there, but it will be exercised only when some clarity comes from the ministry.
From the ministry. Okay, sir. Could you provide any timelines on that, like 2 years maybe maximum, something like that?
Timeline, you have to ask Minister of Railways and the...
Okay, sir. Thanks a lot.
Thank you. Next question comes from the line of Ritika Mundra from JP Morgan. Please go ahead.
Hello, sir. Thank you for taking my question. So just a couple of things. So what is the double stack volume during the quarter, and what was the share of cement in the domestic sector?
Yeah, double stack actually, we moved 1145 double stack trains total, which is a growth of 42% as compared to the corresponding quarter of last financial year.
Yeah, basically in the cement, what we are aiming now for the bulk cement, which is just a commercial run has started, because share is not much. Other than that, we run some bag cement also, which share will be not much, but we run on both piecemeal as well as on the full rate basis, but that is not much now.
Okay, sir. All right. Thank you so much.
Thank you. Next question comes from the line of Ashish Shah from Centrum Broking. Please go ahead.
Yeah, good afternoon, sir. Thank you for the opportunity. Sir, could you help us with the originating volumes for this quarter for EXIM and domestic?
Yes, originating volume for EXIM for this quarter were 497,222 TEUs and domestic 106,271 TEUs.
106,271. Right. Sir, second is, could you help us with the empty running cost for the quarter?
Empty running cost for EXIM was rupees 40 crores. And
sorry, I missed that. I missed the number. Sorry, sir. You got cut, sir. Please.
20.40 crores.
Right.
Domestic 63.84 crores.
Sure. So just to clarify on the LLF provision, you said that out of 450, you had 70 crore of provision. So just to simplify this, can you give us a number for LLF that you expect for 23?
It should be around 370 crores as of now that we have planned. But as you know, the last question you heard, that there is a long murmuring going about regarding refixing of the rates. And there are all kinds of talks. So that gives an indication that we are not also expecting any flare-up in this, and numbers may go down also.
Okay.
But as I mentioned, we have put the figures on the actual basis what we paid for Q1. Like last year, where we played very safe and we kept some cushion also. That cushion unnecessarily we are not keeping this year.
Okay. Got it, sir. Thank you.
Yes, if you take these numbers, then somewhere we'll be landing up around 370, 380 crores.
Got it, sir. Thank you very much, sir. Thank you.
Thank you. Next question comes from the line of Kondinia from JP Morgan. Please go ahead.
Yeah, hi, sir. Thanks for the opportunity. Sir, just want to understand, you had retained your guidance of 10-12% growth on EXIM as well. But given the weakness that we have seen in 1Q, and also you did speak about some headwinds on the in July as well. So just trying to understand where are we seeing some green shoots, or where are we optimistic about?
guideline, 10%, 12%, we're doing what new
Guidance, there is no change in guidance. Guidance will remain the same.
Yeah, sir. Yes, sir, I get that. I'm trying to understand, if there is a possibility or, because you did speak about weakness in July as well. So just trying to understand, what are the reasons why we are little optimistic on that front.
Yeah, as of now, as I said, Indian growth story is intact. So we are not revising any guideline, but yes, there are commentaries like the shipping line, one of the shipping line, they said they are seeing the weakness across the globe. So if those winds will affect the Indian business as well, there may be a little effect. So let's wait and see. As of now, we are sure that we will be able to meet our financial targets very well because of the upward revisions what we have taken. So we will be able to do that 10% in the top line, 10% in the bottom line, what guidance we have given, we are very sure of that. If numbers improve, then these things will improve.
So is that 10% on volume as well, on exim volumes as well?
That is what we have given guidance. In that, if the winds are not favorable, so even then we are sure of meeting our financial targets.
Understood, sir. And sir, secondly, on the pricing front, you did speak about, passing on the holiday discount that was taken off. So is there any other pricing action that's being taken or planned at the moment?
I already told you, two things we did. One is we passed on the rail freight increase given by the Indian Railways.
Mm-hmm.
And second is that we increased our terminal charges like handling and other charges at terminals, which is giving us additional revenue with good margins.
Sir, is it possible to quantify this?
No, we don't do that, but it is that you can see from the numbers what we have given for the quarter.
Sure, sir. Thank you very much.
Thank you. Next question comes from the line of Aditya Munkia from Kotak Securities. Please go ahead.
Thank you for the opportunity. My question is related more to domestic segment. Would you be able to provide us with a broad breakup across commodities of your domestic business? The add-on question that I had was on cement and food grains. While you have spoken about cement, is the bulk loading of food grains as big an opportunity? If you could give us some colors, that will be very useful.
See, we are basically going through all the commodities traditionally we carry, so we don't give the breakup of the commodity-wise, what are the commodity we carry on that. But as far as bulk cement is concerned, that we have just started, commercial trial has been successful and we are seeing a very good growth in the bulk cement in the coming days. As far as food grain is concerned, we are moving food grain now mostly on the baked food grain. The bulk also we have made a trial and we are offering that, and we though the volume is not much, but still people are interested to go for this bulk movement and which already is on the process.
Okay, sir. The second question that I had, which was again related to it, was that railways, let's say, earns a decent amount of money on these two commodities. If my numbers are right, close to about 18,000 crores every year. Now, how much can we get out of this portfolio, let's say, over a 3-year perspective of warranty?
See, we are not looking at what we are taking out of the railway portfolio. It is we are looking which is going today by road. How can we divert from road to the containerized mode? That is what we are looking for. The bulk cement today is mostly moving by road. That we are trying to convert to the containerized rail. But what is the rail share, we are not looking for to divert from rail share to the container.
Understood. I'll have more questions, but I will get back into the queue. Thank you.
Thank you. Next question comes from the line of Ketan Gandhi from Capgrow. Please go ahead.
Hello. Hi, sir. My question was regarding the length of the wreck. So basically, prior to DFC, it was told that 700 meter length would be there. And like post DFC, like the length of the length would be twice. So is there any update on this?
See, that is what I was answering earlier question about DFC advantages. Still there are some systems to be certain in DFC running. This just started. We are getting some benefits, not the full benefits. So the length of the train is one such thing which are not yet implemented. We are only doing the normal length of the train. The full length trains doing some trails but not implemented on the regular train.
Okay, sir. Thank you.
Thank you. The next question comes from the line of Rakesh Sethia from HDFC Mutual Funds. Please go ahead.
Yeah. Hi. Thank you for the opportunity. So just wanted to follow up a question on the LLF. So last year, our LLF booked in the profit and loss account was about 465 crores. And if I take out the 70 crores of provision, that gives me an LLF of 395 crore, which probably you would have paid to the Indian Railway. Now, there was an escalation clause of 7% also. If I take that into account, this year's LLF should be about 420 crores versus roughly about 370, 380 crores you've guided. So I'm just trying to understand, has anything else also changed in this match, or I'm missing something?
When you are very good at analysis and doing all the numbers, then don't worry too much about analysis. It leads to paralysis. So when my CFO is giving you some number, there are certain things which we will not be sharing with you. We are doing some calculations. We are in discussion with Railway. So everything will not be put into a rational with plus or minus and into and divided by.
Okay, sir. So second question on capex, if you could help us understand what are the capex we should be building in for this year and maybe next year.
Capex program is on. See, this program, as I mentioned in my last call, we are on with that program because that capex is towards procurement of the rolling stock and containers. So that program is on. Other than that, the distribution logistics, we are going an asset-light model with a PPP mode where we will increasing the return on our capital. So in this capex program, there are certain geopolitical issues, like we can't procure now containers from China, so we are developing the container industry in India. Concall is doing that, and there is good headwinds in that. So this is what I was discussing. And the rate production, the rail wheel set, there was an issue, and now government has allowed us to import the rail wheel sets, so we are going ahead with that. So all these actions will take some time. Thanks to these actions, they can't be just like switch on, switch off types. We can't do it. So these things, with all these things now taking shape, the capex will continue. There may be little capex, the spending will be less during this financial year. We are expecting to do around 550-600 crores in this year. But the capex program for the rolling stock is on course and it will continue. If not this year, next year we will get the rakes and we will get the containers.
Okay, sir. Understood. Thank you very much, sir.
Thank you. Before we take the next question, a reminder to all the participants that you may press star and 1 to ask a question. Next question comes from the line of Abhijit Mitra from ICICI Securities. Please go ahead.
Yeah, thanks for taking my question. I have two questions. First of all, in terms of domestic volume accretion, and it's a very impressive accretion quarter after quarter. Are there any specific catchment areas which are contributing to this, or the growth is broad-based? And second is on the EXIM side, we have seen, recently, train being carried from Whitefield to JNPT for Hapag-Lloyd as far as, TVS EXIM cargo is concerned. So this is a big opportunity which is shaping up for us incrementally. So these are the two questions which I have. Thanks.
Yeah, your first question, domestic, it is broad-based. The Indian cargo flows in India are very well set. Major cargo flow takes from west to east and north to south, and some from south to east. So these cargo flows are continuing, and it's a broad-based growth we are getting, except that bulk cement, what we are talking of, that's a new cargo line, and that we are developing. It will take time. So the infrastructure from our side, we are ramping up, and all the ecosystem from the cement company side, they are working on that. Yes, EXIM is a new trend, that the cargo is moving from east to west coast for exports. That's giving us very good lead. And this, as of now, it looks like that this will continue. But that is not the right thing for the country to be done. So I can't comment on that. But yes, as far as company is concerned and the leads are concerned, yes, we are getting the business. We are seeing that will continue for this financial year.
No, got it. Thanks.
Thank you. Before we take the next question, a reminder to all the participants that you may press star and 1 to ask a question. Next question comes from the line of Aditya Mongia from Kotak Securities. Please go ahead.
Yeah, thank you for the opportunity. In your opening remarks, you did mention about this short sea opportunity linking Iran, and we know of this train that has carried cargo from Russia to India. So just trying to get a sense of the opportunity size that can open up because of this endeavor of ours.
Aditya, there is a lot of opportunity in this. So when we gave, like even today, there is demand from the trade to asking for containers for the export of rice into Iran and Central Asian countries, and a lot of exports to Bangladesh. We are rationing that because we got our own equipment problem. We got containers. The domestic growth is very high, as we mentioned, 35% growth. So the equipment we don't want to waste into these circuits, because domestic is better turnaround and better paying proposition for us compared to this. So we are working on procuring more containers. Because of geopolitical issues, as I mentioned, now unless the container industry developed in India, we can't get containers. The process is on, and it will take some time. Once we get that, we will definitely get into these segments, doing more containers for exports to Bangladesh and to Iran and Central Asian countries, and also from point-to-point destination. So wherever the opportunity comes, we will be doing those things.
Got that. And all the very best for this opportunity and others. The other question that I had was more linked to the land license fee. Should I assume that in the numbers that are actuals, the 6% number, which is on the base, whatever number you have to give, and 7% inflation are all intact when you are thinking through 370 crores of LLF for the full year?
I think I sufficiently explained while answering your colleague earlier. We will not be giving you the entire gamut of discussions what we are having and what the proposals are going on. So we are giving you some forecast. It will not be much here and there swings, but you have to go by the word of the CFO.
Okay, I got that, and that clarifies. Thank you, sir. Those are my questions.
Yeah.
Thank you. Before we take the next question, a reminder to all the participants that you may press star and 1 to ask a question. Next question comes from the line of Ashish Shah from Centrum Broking. Please go ahead.
Yeah, thank you. Sir, we had in our earlier discussions talked about transit assured operations going up. So could you give us an indication on where we are and how we would have moved over the last 1 year or so in terms of these operations?
Transit assurance has been very well taken by the trade, and in cooperation with the Indian Railways, we are running timetable trains from our depots from Dadri, Katwa, etc. to Mundra and Pipavav, and we have been able to divert sizable number of traffic from road to rail. So, and even from Chennai, between Chennai and Bangalore depots also, we are running timetable trains. So this has been well received by trade and helped in increasing the business for the company.
Right. So could you leave us with any percentage of, let's say, how much percentage of our operations would be on such transit assurance, both on the import and export side?
Right now,
okay.
We keep the number with us, but it will be difficult to share it with you right now.
Right, sir. Right. Yeah, that's all from my side. Thank you.
Thank you. The next question comes from the line of Bhumika. Please go ahead.
Yes, sir. Just a bookkeeping question. If you can just tell us the lead distance for both EXIM and domestic, as also the port-wise breakup that you typically give.
Lead for this quarter for EXIM was 674 kilometers. For domestic, it is 1320 kilometers.
Sure, sir. And the port-wise volume breakup, sir?
Port-wise volume, okay. It is JNPT 35%, Mundra Port 37.5%, Pipavav 11%, Vizag 5%, Chennai 5%, Tuticorin 2%, Cochin 2%. These are the main ports that have the presence of Concall.
Sure, sir. That's quite useful. So just to clarify, on the haulage rate, the discounts which are withdrawn from effective 1st August, we have also withdrawn it, passed it on to our clients from 1st August, or is there some lag that is there for us?
As I already explained that haulage rates for empties, they were withdrawn from 1st May to 15%, from 25% to 15%. So at that time itself, we have revised our rail freight as if the haulage rates are withdrawn from 25 to nil. So we have factored in everything. So now they have made from 15 to 10 and gradually they will make from 10 to 0. Already we have factored from 1st of June and took the revision.
Okay, okay. And on the 5% laden also, we did it immediately at that point.
From 1st of June, that has been taken care of already.
Okay, okay. So just last clarification on this LLF. Last year, when we did the 465 crore provision for the LLF charge, does that include some, higher provision than what was actually paid off, and which is why this year there is a decline? That is the way to think about it?
So, Bhumika, provision means that only. Provision means you pay something in actual and you keep something additional on it, looking for some other factors. So obviously, as I mentioned, around 75 crores of rupees, 75 crores of rupees is just provided for. It is lying with my balance sheet. It is not paid right now. Last year we were not privy with many things about the rates from all the states, as I mentioned in the first question earlier. Now that we have got all the rates with us, and as CMD mentioned, there are other negotiations also going on with the ministry. So we have taken all the factors, and what I mentioned to you that whatever actual we have paid, we have already booked into Q1. So there is no additional provision that we have made this quarter. This is what I clarified.
Understood, sir. Understood. Great. That's it, sir. And I think there are no further questions in the queue, so we can end the call. I would just like to thank you for giving us an opportunity to host the call every time, and also to the participants for being on the call. Thank you very much.
Thank you.
Thank you. On behalf of DAM Capital Advisors, that concludes this conference. Thank you for joining us. You may now disconnect.